In today's video, we're going to discuss why it's the moment of truth for Yieldmax funds, particularly YMAG and YMAX. I think it's make it or break it time for these Yieldmax funds, plus the market is at a crucial inflection point. So we're going to discuss why I'm potentially selling the rest of my Yieldmax funds and what I'm buying instead of Yieldmax. These funds help us earn over $500,000 per year in dividends, as you can see below, and live free from a 9-to-5. If you need help doing the same, email me for my e-guides at akintodd48@gmail.com, because we use margin to get these dividends, okay? This margin leverage that I have, about $400,000 that you see on the table here, will be paid back by my dividends of over $500,000 per year in less than 1 year. So we're almost at $600,000 per year in dividends. And again, we're going to pay back our margin in less than a year. So I'm not worried about my margin leverage for all you haters out there who think that my channel is going to fail because I'm using margin. I'm also up for the year still, even after the recent correction in the market. We're still up 19%, beating all of the indexes. The S&P is up 13, the Nasdaq's up 11, the Dow's up 7, and the Russell's up 3. We were also down 19,000 on Friday, but that's only 1.58%. If you look above, you'll see that that beats the S&P and the Nasdaq once again. So we're beating all the indexes on a year-to-date basis, and on a daily basis, we usually beat the indexes as well, thanks to Cornerstone, Yieldmax, Defiance, and Roundhill funds. But now Yieldmax is showing some cracks in the surface, and I wanted to share with y'all why I think Yieldmax is sort of underperforming and what I'm going to be buying instead to replace that lost income and get more performance in the process. Okay, as we all know, in the recent market correction, Yieldmag and Yieldmax's performance has been abysmal in my opinion. When the indexes are down 1 or 2%, Yieldmag or Yieldmax can be down 3 or 4%. So that's really important, especially when you're using margin leverage. You have to stay tied to the indexes, and if your play is down 1% or 2% more than the index, well, that's going to double your losses performance-wise. So you have to be very careful with buying things that aren't exactly indexed, okay? YMAG, yes, it's a big part of the indexes, but it's not really indexed because it doesn't have the diversification of the rest of the S&P and Nasdaq to shield its volatility. Same for YMAX. That's definitely not indexed. I mean, it has a few names in it. It has more than just tech. It is a little diversified, but it also has some questionable holdings in it. So I've been wanting to upgrade from Yieldmax to Roundhill, Defiance, or Cornerstone funds, and I'm going to share with you again what funds I'm buying instead of Yieldmax. But should we dump Yieldmax truly? I mean, is YMAG and YMAX really doing that poorly for us? Well, the problem with Yieldmag is it's 50% maintenance for me, and it only has a 40% dividend, okay? That used to be a high dividend when Yieldmax first came out, but now we have Roundhill and Defiance, which have bigger dividends and lower maintenance. So if Yieldmag has 50% maintenance and YMAX has 50% maintenance, and they're both around 40% dividends, then why not own Roundhill that has 50% maintenance as well, but it has bigger dividends and more diversification, okay? So Roundhill, 50% maintenance there, and it doesn't show the dividend here, but we know that Roundhill is around a 50% yield. QDTE is. If you need help understanding maintenance, that's in my Volume 3 e-guide. For every $1 you put in your account, you get $4 of purchasing power. I'm just using a fraction of my around 1 million in purchasing power to get ahead. Every one of you has this power granted to you in your brokerage account. When you get to over 25,000 in E-Trade, that's when you get the ×4 number. But you have to be careful. If you buy high maintenance names or 50% maintenance names, that sucks up 50% of your equity, okay? So we need to be able to stand over 20% corrections in the market at all times when using margin so that we can withstand margin calls and still withdraw freely from our account to pay our bills. To live free from a 9-to-5, we have to get these dividends to not only pay down our margin debt, but then also pay our bills. So when our margin debt is paid down by the end of the year, my account will grow by about $400,000, my debt will be gone, and then I'll be left with all these dividend paying assets and myself paying monthly cash flow for life that qualify to banks for loans. That's how we get ahead and live free from a 9-to-5, because you need either a pay stub or dividends to qualify for loans from banks. So I want to use these dividend funds like Yieldmax, Cornerstone, Roundhill, and Defiance, but a lot of them have 50% maintenance and they're not fully diversified. So YMAG, YMAX, 50% maintenance, not fully diversified. They fall bigger than the indexes on down days, and they have smaller dividends than Roundhill. So why not go with Roundhill when it has the same maintenance, higher dividends, and more diversification. Well, we've already done that. And I also can't compound Yieldmax funds because we can't drip their dividends, okay? How do you compound Mag 7 names when there's erosion on their charts like we're seeing with YMAG, okay? If we go to a chart of YMAG, we're gonna see massive erosion on their chart. And yes, they're performing quite well when you factor back in dividends, but still, I want the compounding power from something like a Fangu. So if I get rid of YMAG, I can always go into Fangu. Yes, it's 100% maintenance. Yes, it's more risky than traditional single leverage funds. But if you go to the Morningstar test of Fangu, you'll see that once again, if you put about $10,000 into Fangu, it made you hundreds of thousands of dollars over the course of 10 years. So we can get better compounding with Fangu, in my opinion, because they don't really erode as much as YMAG. And then we can't get compounding from YMAG dividends because we don't want to drip their dividends. We only want to drip Cornerstone because Cornerstone is a 5-star fund and it takes its 21% dividend and it drips it at the NAV for free money every month. So I'm only dripping Cornerstone once again because that's how we actually have an advantage when reinvesting our dividends. We reinvest them down at the lows with Cornerstone. But with YMAG, there is no advantage to reinvesting your dividends unless you get a bigger market drop. I always say I like to rebalance YMAG and YMAX on bigger market drops so that I can spread my risk out better and still increase my income in the process. But you need to buy in wide nets with these funds because they move bigger. Well, if we don't really get a real pullback in YMAG and YMAX, then we can't compound because we're not dripping. Again, we can only drip Cornerstone for its special NAV drip. So how do we compound our Mag 7 gains? These are huge gains that we're experiencing with the AI boom, and we don't want to miss out on these gains just to have dividends that erode our performance. And again, YMAG is performing well. It's performing just fine with the indexes, but on typical down days, it moves down more than the markets. And when we're using margin at this channel to get ahead, we want to reduce our volatility and our beta, okay? So YMAG's beta is a little bit more than the S&P. If the S&P moves 1 for 1 on a down 1% day, YMAG might move down 2% on a down day. So we have to be careful with YMAG, and we can't even compound it. So why not just stick with Fangu and then buy more of these other funds, which I'm about to mention in 1 second. Okay, and the other thing to be aware of with Yieldmag and Yieldmax is their drawdowns are so steep when the market falls that when you're using margin with 50% maintenance, that cannibalizes your account so fast. So even though they're performing quite well, YMAG and YMAX, if you want to say, even if they're performing quite well, they can still take you down in a market crash because they're 50% maintenance and they have steep drawdowns. So again, when using margin and even without using margin, you want to prevent these drawdowns in your account. And YMAG and YMAX, yes, if you hold them long enough, you're going to do well. But if you're using a lot of margin like me, then you want to be able to withstand the pain up front. We want to be able to withstand over 20% corrections up front and still withdraw from our account freely. So I'm going to go ahead and dump YMAG, dump YMAX, stick with Fangu to keep my Mag 7 exposure, stick with FangD to hedge Fangu, and then I'm going to be also selling some AIPI and the remainder of my FEPI because AIPI and FEPI are also 50% maintenance. These RexShares, they're 50% maintenance with only 20% dividend yield. So why would I stick with FEPI at 50% maintenance with a 23% dividend yield when I can go to Cornerstone with a 21% dividend yield and it's 30% maintenance, okay? Cornerstone shows here it's 16% dividend yield, but we have a 21% dividend on Cornerstone, and we drip that down at the NAV, again, for free money every month. So why would we want to own FEPI or even AIPI when their drawdowns are significant? They have 50% maintenance. FEPI's yield, for example, is about the same as Cornerstone when you factor back in the drips, and Cornerstone is fully diversified. FEPI and AIPI are not. They're only about 10 to 20 stocks. So why not dump YMAG, YMAX, and some RexShares, AIPI and FEPI, when they have 50% maintenance around the same yields as Cornerstone when you factor back in the drips, premiums, and rights offerings, and they have less diversification than Cornerstone and Roundhill funds. Okay, here's another factor to consider with Yieldmax funds. As you can see by the chart of the NASDAQ, QQQ, we're right here on the fence. We're near the 200-day moving average. We're in no man's land. We're in between the 100-day moving average and the 200-day moving average. Bitcoin is also around the 200-day moving average, GBTC, and Bitcoin is a big measure of risk taking in the market. So we broke the 200 on Friday with Bitcoin, but we could hold just like it did here in August, but we're not sure. Same goes for QQQ. We're right near that 200-day moving average. And if you look at the VIX has spiked, and we're near resistance of 20, 20, and 20 here. October highs, April highs, and now August highs. So we're near resistance on the VIX, and we're near support on QQQ. So we're right on the fence. This is setting up for a perfect buy in the markets, but we don't know. This looks almost too good to be true. This looks almost too easy, too much of a layup to buy here on the 200-day moving average, and then we're straight up from here. So I don't know. I'm positioned for both directions. I keep my long positions on and my short positions on. As you all know, I keep put options on at this channel. They're up almost 2,000% during the recent crash. That's how I ensure my portfolio against market drawdowns of over 20%, because when we reach 30% corrections, that's when we see a margin call. But if we did have a 30% correction in the span of a month, we would make more money than we potentially lost in our account. We would make over $1 million with just $100 to $200 in our options, because if they're up 2,000% like they were in the recent crash, and that was only a 15% correction, imagine a 30% correction. We would make well over $1 million, again, with our put options that act as insurance against our margin leverage. If you need help insuring your portfolio like I do, that's in my Volume 5 e-guide. So we're right on the fence with the NASDAQ, as you can see, and so this is a worrisome time for Yieldmax. It's make it or break it time for YMAG. And to be safe, I'm going to liquidate my YMAG and YMAX on Monday, and I'm going to go into RDTE instead, because that's the new Roundhill fund that is dropping. It has 2,000 names for diversification, and the growth prospects for the Russell and YMAG for the rest of 2024 are about the same, in my opinion. Tom Lee expects a 40% increase in the Russell. I don't think that he's expecting a 40% increase in the Mag 7 names. So I think the growth prospects are actually better for the Russell. We're getting rate cuts coming down the pike in a few months perhaps, so that's going to be a big tailwind for real estate and small cap stocks. So I'm going to sell YMAG, YMAX, AIPI, and FEPI because they have 50% maintenance and only 20 to 40% yields, and then I'm going to go into RDTE on Monday for the same 50% maintenance but more diversification, more growth prospects, and twice the yield. So you're going to see our income increase, and you're going to see our debt stay the same on Monday. So I'm going to be focusing more on Cornerstone, Roundhill, and Defiance going forward. Cornerstone and Defiance moved down less on down days. That's how I outperformed on Friday. Cornerstone, as I said earlier in the video, is a 5-star fund, and it moves upper left to right on its chart, as you can see here on the Morningstar chart. But on the E-Trade chart, you'll see that it goes sideways to down. That's because you have to factor back in dividends, drips, and rights offerings for Cornerstone. I have to say this in every video, because if I don't, people are going to email me and say, why do you buy Cornerstone when it goes sideways to down on its chart on a 10-year chart? Well, again, on the Morningstar chart, you see it goes upper left to right. That's because you have to factor back in dividends, special drips, as I talked to you about earlier, and the rights offering. Okay, the rights offering is how you really level up your account in Cornerstone. That's how I got my account going so fast after Corona, was through the rights offering for Cornerstone. And we alert you of the Cornerstone rights offering announcement here on Discord, okay? So if you need help playing Cornerstone, that's in my Volume 4 e-guide. And if you want that Cornerstone rights offering announcement, it's here on Discord, where we alert you, again, of that rights offering announcement. And we have over 1,000 members here in the Discord chat pursuing the FIRE lifestyle. So if I can't answer whatever questions you have in your brokerage account, someone here most likely can. All right, so just remember, again, when you buy my e-guides, you get free access to Discord for life, and you get my phone number for life, so keep that in mind. And if you need help with anything else in your account, again, feel free to call me. I love talking about this stuff. It's what I love to do. I talk to clients all day, sometimes till I'm blue in the face. I lose my voice, yes, but still, it's what I love to do. You guys and gals are like my extended family, especially all of my members here at Discord. I really love you all so much. So if you like my video, please click like or subscribe. The likes that you're giving my video are really helping it push to more audiences, and I really need y'all to push these out to more audiences so they can learn about how to be financially free for themselves as well. So again, please like the video if you haven't liked it already, and I'll talk to you soon, everyone. Thanks.